7 things I wish I knew when I first started trading. Number 1, focus on protecting what you have, not on making money. Legendary trader Paul Tudor Jones once remarked that the key to successful trading was to play great defense, not great offense. Ironically, when the average person ventures into trading, all they can think about is how much money they're going to make. They have visions of Lambos, huge houses, and living on a beach. To fulfill on this vision, they try to make huge gains very quickly. They think, if I can just double my account on this one trade, then within a few years, I'll be able to quit my job. In reality, the market often has different plans. No matter how good your analysis is, you can always be wrong. You may love the product or believe it's a can't-miss stock, but things can change very quickly. When you find yourself in a losing position, it ties up your capital and your mindset. It is a terrible feeling and situation you never want to be in. Your first priority is to always protect your downside. This is not just my opinion, it's basic math. Small losses are easier to come back from. For instance, with a 10% loss, you only need an 11% gain to get back to break even. If you were to lose 50% on a trade, it takes a double just to get back to where you started. If you let a loser get out of control, like a fire, it will soon envelop your entire account and take you hostage. You're left hoping and praying for the stock to rally, when in reality, it has already shown itself to be a loser that is not in favor with the market. Holding on to a loser will not only put you in a huge financial hole, it will also destroy your confidence as well. Don't go there. It's not worth it. Set a rule to use a stop loss and to limit your risk on each and every trade. Remember, if you take a small loss, you can always get back in. Cutting losses is an insurance policy to protect your account against massive losses. Visit my blog to download a free risk management spreadsheet to help you mitigate your risk on each trade. The link can be found in the description below. Number 2, less is more. Less indicators, less trading, less tips, less. Too much trading really does kill a trader. Amateurs usually suffer from one of two traits, either a failure to cut losses or overtrading. Overtrading was a huge hurdle for me. It took me years to get over it. Once someone gets a taste of technical analysis, their eyes begin to play tricks on them. They are constantly getting signals to buy or sell based on each and every tick. Throw in social media, and there becomes an increased pressure to trade. FOMO, or fear of missing out, is a real threat to trading success. When your emotions take a hold of you, it's easy to make risky decisions or to mishandle a winner by selling on a normal reaction. Don't let that be you. The longer I trade, the less I want to trade. It's not that I don't like trading. I love it. But I love making money more. And the key to making money is to wait for the best setups and the strongest market environments when the odds are truly in your favor. Once you're in a winner, let it play itself out. Too much trading kills a trader. With all the emphasis on trading and zero to little commission fees, many have forgotten that cash is truly a position and often the wisest one. During choppy, range-bound markets, both shorts and longs can find themselves frustrated and agitated, trying to trade in a market that just isn't healthy. Why do it? Why not just wait for conditions to improve? I used to feel like I constantly needed to trade. I'd take on huge positions and always be in some sort of action. You know what would happen? I would dig myself a huge hole during market corrections and then spend months just trying to get back to break even. If I had just been in cash, I could have avoided all the downside and had seen my account grown handsomely while the market was in an uptrend. While cash is not exciting, there are many times where it is the safest and wisest place to be. Less indicators. Along this same line comes the concept of less indicators. Most people think that you have to be a genius to trade, or that you have to have a really complex system in order to make money. The truth is, there is genius in simplicity. The problem with overly complex systems is that they can lead to paralysis by analysis. If you have too many moving parts, you are likely to get conflicting signals. In addition, an overly complex system can be like trying to juggle many balls in the air. The more you throw up, the more one is likely to fall. Instead, keep your trading simple and to the point. Study a system with a proven track record that you understand and make a plan to stick to it. Number 3, be a specialist, never a jack of all trades. When I first started trading, I had all these grandiose plans. I had it all figured out. I'd go long in strong uptrends, short in downtrends, and place iron condors in range-bound markets. It sounds logical, but in practice it was a nightmare. When you try to spread yourself in this fashion, you never really get a firm grasp of any one style. You wind up knowing a little bit about a lot of different things, rather than being an expert at one particular setup or skill. Think about sports. In football, the quarterback doesn't try to kick a field goal or learn how to play linebacker. It would be a waste of his time. He doesn't even try to play other offensive positions. He just focuses on his particular position and being the best that he can possibly be. To be successful, you have to focus exclusively on your role and eliminate anything that is not needed. When you try to be a jack of all trades while trading, you spread yourself too thin. Not only will you fail to be an expert in one strategy, you will also wind up missing many important signals. For instance, by the time it becomes obvious that the market is in a downtrend and you decide to switch to the short side, it may be too late. The market may actually be near a bottom. It is better to stay focused on one strategy. Knowing it inside and out and never deviating from it is the way to have success. If your strategy is not in season, take a break from trading. You will be refreshed and ready for the next move rather than being frazzled and burnt out from trying to juggle too many trading systems. What trips up many traders is that they look for perfection. After a string of losses, they abandon their system and look for a new style of trading. This leads to never really getting any one style down. The truth is, no system will ever be perfect. There are times when index investing will be in fashion and times when value investing outperforms. There will be times when breakouts are hot and times when pullbacks look like they are the way to go. And there will even be times when cash outperforms. By the time something becomes obvious, it is usually near the end of its cycle. If you are constantly trying to switch techniques, you will end up being late to the party. Stick to one style of trading and become an expert at it. If there's a period of difficult trading, scale back or go to cash. You will be refreshed and ready for future trades. Think in terms of probabilities, not certainties. When I first started trading, I wanted to have a crystal ball. I wanted to be able to predict the future. Over many years, I finally came to the conclusion that this is impossible. There is no one in the world who can consistently do this. Thus, the key is to think in terms of probabilities, not certainties. In a hot market, I know the probabilities are in my favor, so I can ramp up my trading and exposure. In a poor environment, I scale back, knowing the odds are against me. Sometimes you can do everything right and have a losing trade. Just as anyone can get lucky and make a 3-point shot here or there, sometimes the amateur can make money using a foolish technique. Anything goes on Wall Street, but the key is to think about the long-term effects of your decisions. How would this trade look if I did it 1,000 times? How much money will I make if I do this over and over again? If you start to think that way, you will be on the path to success. Technical analysis will never be able to predict market outcomes 100% of the time, but it will allow you to put the probabilities in your favor and size up excellent risk to reward scenarios. Don't beat yourself up if you sell a stock and it heads up higher without you, or if you buy a stock and then you get stopped out. The key is to remember you will be making thousands of trades over your career, and the outcome of one particular trade really shouldn't be that important to you. Instead, you want to have an edge and you want to turn that edge over and over again.